Okay, Assalamu alaikum and good afternoon. We'll continue with the discussion on governance. I'll focus more on Sharia governance. In some ways, some of the things I'll talk about was touched on by Dr. Zamir, but my focus here will be more on Sharia governance. After a brief introduction to provide a framework on Sharia governance, I will look at the Sharia governance framework mainly as proposed by IFSB, and then move on to some issues in Sharia governance, mainly related to diversity of fatwas or diversity of the rulings and the implications resulting from it. In terms of how we define Sharia governance, we start with what is the mission of Islamic financial institutions. One of the definitions which actually appeared a long time back in a World Bank publication was to meet stakeholders' desire to conduct financial business according to principles of Sharia. The key issue here is that most of the stakeholders in Islamic finance, they're doing Islamic finance because of religious convictions, and that's why it's very important that the Islamic financial institutions or the Islamic financial sector adhere to the Sharia principles. Beyond that, in common law, in the common law system, there's a concept called ultra vires, which basically translates to beyond powers. And what this says is that if a corporation enters into a contract that is beyond the scope of its corporate powers, the contract is illegal. So most of the organizations will have an article of association which defines what the company is supposed to do. And according to this principle in common law, if a company does things which are not included in the articles of association, those contracts become illegal. And actually, you can take a company to a court if they do something which is against the articles of association. So if an Islamic bank is established to do Sharia compliant business, if they don't comply with Sharia, in a common law country, actually it's a violation it's a legal violation and can be taken to court. So what I'm trying to say is, other than the necessity of being Sharia compliant because you're selling your products as Islamic, there's a legal implication in mainly common law countries. To have Sharia compliance, we need structures and processes which ensures that the Sharia requirements are fulfilled from different perspectives of stakeholders. So to understand Sharia governance, we actually need to understand what are the expected Sharia requirements and also who are the stakeholders. So once we understand the stakeholders and what are their expectations and Sharia requirements, we can have a framework for Sharia governance. So let's try to look at the stakeholders and the requirements first before we go into governance. As was mentioned by Dr. Zamir, the key stakeholders, of course, are the shareholders. They establish an Islamic financial institution to do mainly business in a Sharia compliant way. The shareholders are in a governance framework represented by the board of directors. And the objective of shareholders is to earn profit, providing Sharia compliant services. In a banking framework, a second key stakeholder are the depositors. If you think of a balance sheet of a bank, bulk of the fund comes from the depositors, not the shareholders. So if your capital requirement is 8 or 12%, by implication, the remaining part is coming from depositors or investors. So the depositors and investors provide bulk of the funds, and they use banks or financial institutions for good services, competitive returns, and also compliance with Sharia principles if it is an Islamic institution. So Sharia objectives is one of the objectives of depositors when they are engaging with Islamic financial institutions. The third stakeholder is a broader concept, and again, this has been discussed by this World Bank research which looked at corporate governance of Islamic finance. And according to them, the community, the Muslim community, is also a stakeholder. For a Muslim community, they need Islamic financial system to fulfill their religious requirements. If there's a believing Muslim, for him, maybe engaging with a conventional banking system is against his or her beliefs. So the community expects a just, equitable industry serving all the financial needs of people. And finally, of course, the last stakeholder is regulators and supervisors. They are one of the key stakeholders. It's a public body, and their objective is to maintain systemic stability, soundness of financial institution, and protection of stakeholders who are not taken care by the organization level. So as we said, the board of directors takes care of the interest of the shareholders. Depositors or investors who provide bulk of the funds, there is no system in the conventional corporate governance system to take care of their interests, and regulators are there to protect the consumers in terms of consumer protection laws, among others, to ensure stability and soundness of financial institutions. So these are the stakeholders. If you look at the requirements, of course, for Islamic finance, the first requirement is the legal requirement of being Sharia compliant. And when we talk about legal requirements, we can think in terms of Sharia compliant products and also Sharia compliant operations. Sometimes we focus too much on products but forget the operations. But you can have a Sharia compliant product, but if it is implemented in a wrong way, it becomes non-Sharia compliant. And usually when you're talking about Sharia compliant, if a Sharia board has approved something, in structure it may be Sharia compliant, but in practice, that's where non-Sharia compliance comes in. So all products should be Sharia compliant, and also the operation should be Sharia compliant, ensuring contractual conditions and stipulations, profit loss sharing. For example, if you're doing a murabaha, Sharia says you should own the product before you sell it. And if you're selling something which a bank doesn't own, that means it's not a Sharia compliant product. And similarly, issues related to if there's interest income, you have to take it out. If there's penalty charged, it goes to a charity. How you deal with early and late payments, payment of zakah, whether it's the responsibility of the organization or the individuals pay it. So all of these are operational issues which also should be complying with Sharia. The other objective is social. Now, there is some debate on whether Islamic financial institutions should have social objectives. We have a view of the Islamic economists and academics, and also the people who actually talked about the Islamic economy, not the financial sector, that an Islamic economy should be one which fulfills the maqasid, the broad social objectives of the society. So in this case, if you look at it from a broader perspective, we expect Islamic finance to contribute to growth and justice in the society. Social dimension is promoting social welfare. And of course, the debate between Sharia compliance and Sharia-based, which Shahir, I think, touched on in his presentation today. And the other issue about requirements is the credibility and trust in the system. And this is also very important because we know that the financial transactions are not tangible goods. It is a relationship between individuals. These are financial products are basically legal constructs which, where relationships are between the bank and the clients. So the financial institutions, they act as a fiduciary trustee. So they take people's money and they're supposed to use it in a certain way. And if this trust is broken, that can be very serious for financial institutions. So credibility and trust in the system is actually, especially after the crisis, these things have been discussed more, that trust and credibility of the financial institutions become a very important thing. And from a Sharia point of view also, it is very important. Because from a regulator's perspective, these are important because if there's no trust, you may have issues related to stability and performance of the industry. And basically credibility, and I think Dr. Zamir also mentioned the issues about ethics versus legal compliance. You may be following the law, but if you're not ethical, that can also result in terms of credibility and trust. For Islamic finance, one of the things where credibility and trust in Islamic finance comes in is related to Sharia compliance. And as we will see that in some cases, I think the credibility and trust are to be taken very seriously in terms of Sharia compliance. So given this framework, we can look at the metrics in terms of what is the stakeholders here and what are their expectations in terms of the Sharia requirements. So shareholders, they of course open business to do Sharia compliant business, so they must ensure that the products and operations are Sharia compliant. Fulfilling maqasid, credibility, trust, I put a question mark. That means that some banks may do it, others may not consider these things. If you look at if an Islamic bank is established just to make profit, they may not be worried too much about the social implications. On the other hand, you may have an Islamic bank which also incorporates social elements into its operations. And I'm not sure if they're too much worried about credibility and trust. If it's a business thing, maybe they will. That's why I put not no, but a question mark. Depositors, investors, of course, bulk of the people using Islamic finance, they use it because of religious conviction, so they want Sharia compliant products and operations. About maqasid, again, I'm not sure if that's something they have in mind when they deal with the Islamic bank, but credibility and trust for them is definitely important. As for the community, as we see that all of the things which we mentioned are the community expects to be in an Islamic financial institution. And as for the regulators, we put a question mark. Some regulators may look at these things depending on the regulator. For example, we have in UK Islamic finance. For them, Sharia, whether Islamic bank is Sharia compliant or not is not very, because of the secular nature of their regulations, they're not worried about it. For them, mainly the key issue is the systemic stability, which depends on the credibility and trust of the system. Now, in some countries like Malaysia, this will be all yes, because the law requires Islamic banks to be Sharia compliant. Then you have other jurisdictions where Islamic banks are operating without any regulatory requirements of Sharia compliance. So it's market-determined Sharia compliance. Now this is, in some ways, the survey which was done. I just wanted to show you what are the expectations of the, mainly the stakeholders, meaning the user on the demand side. As you see, there are 477 respondents from Malaysia, and they were asked the levels of importance of Islamic bank objectives, what it should be. The answer was not important to very important, and the way we come up with this mean is, this is given a 5-point. If this is the answer, it's given a 4-point, 3, 2, and 1. So when you average it, basically, this shows how close the answer is towards this, very important. So if you look at what consumers, and these are actually people who use Islamic banks, so survey is done on Islamic bank customers. For them, prohibition of riba is very important. As you see, it's very high. 4.61 average, which is very close to 5, meaning between important and very important. And also Sharia compliant products is very important. And then these two are elements about social impact, what people expect Islamic financial institutions in terms of social impact. A lot of people expect, as you see, said Islamic banks should promote sustainable development and social welfare, alleviating poverty. And for them, profit is something which is at a lower level. Now we can expect that because they are not basically their clients. The key thing here is, as a stakeholder, the expectations of depositors, investors, as we see, is very different than the shareholders. If you look at the shareholders' expectations, this probably would be on the top. So there is a difference in terms of what stakeholders expect in terms of Islamic banks. Okay, I just have a slide on operational issues which should be taken care of. It's not only about contracts, it's about process of the contracts executed. Accounting entries are important because, for example, if in a lease contract, how is the accounting taking place, whether it's treated as an operating lease or a financial lease. Part of it will depend on what the government requires, regulators requires of the accounting entries, how penalty and interest income are treated. They should go to a charity. All of these are operational issues. Profit sharing with depositors, whether it is according to the contract which depositors sign, payment of zakah. And the key issue is if there's income from non-Sharia compliant businesses, they should be excluded from the bank's income. Because again, if you want to keep the income pure, any income which is non-Sharia compliant should be excluded, and these are operational issues. Now, what are the implications in terms of the Sharia risk? Actually, there are short-term and long-term implications. The short-term implications are, as was discussed, if some people know that a bank is not Sharia compliant, and if they are doing Islamic banking because of religious reasons, they may transfer their funds to another bank. As was mentioned by Shahir in the morning, that there are 3 types of clients. There's one group which are doing Islamic banking because purely of religious reasons, and they will not engage with the conventional. Then you have in the middle a large group which will do Islamic if the conditions are right. And then on the other extreme, you have another group which don't care. They are comfortable with conventional. So if you have especially the first type of clients, some of them may actually move to other banks if they see that a bank is not doing Sharia compliant business. So you may lose business, and that's a Sharia risk. The other thing is if Sharia audit is done and you find that some income is not Sharia compliant, that income has to be taken away. Now, the implication here is there has to be Sharia audit which looks at the operations. In some banks, they do it very actively, and others, it's not done properly. For example, I know personally that in Al-Raji, the Al-Raji Bank has a very good Sharia department, very strong, and one of their functions is doing Sharia audit. And every year, there's a huge sum of money which is taken out of their income because the transactions are not Sharia compliant. In 1 year, actually, it was a huge deal they did, and the Sharia audit found that it was not Sharia compliant, and they had to take close to 50 million riyals out of their income. So there's a cost in terms of not being Sharia compliant in the short run. And of course, the long run issue is that the reputation and credibility of the industry. The key issue is how do we understand this reputation credibility issues? It can be found in terms of Sharia audit. A lot of times we know about Sharia issues when there's a dispute. When there's a dispute and a case goes to a court, and then a lot of things of the contracts appear, and we see that a lot of things which were done were not Sharia compliant. And there are very interesting cases. For example, in UK, the first case which was taken to an English court in 2002, the contract was supposed to be murabaha, but the contract has a clause which says that payment by the vendor or the client, the delivery of the good was not a precondition for the payment of the good. So it was, from a Sharia point of view, it was not a valid contract. But that was a contract which was used for this transaction. And an English court, they just looked at the contract, the wordings of it, and made a ruling accordingly. So when you look at these disputes, we see some very interesting Sharia issues which arise. And of course, the other thing is what is the perception of the people, the stakeholders, the depositors, which is very important. And I think sometimes I feel personally that the too much focus is on the supply side, what are banks doing, whether it's Sharia compliant or not. A lot of times we forget the demand side. And ultimately, the depositors, investors, these are the key stakeholders, and it's very important how they perceive Islamic banking. Which means what? Part of it is ignorance. They don't know what Islamic banks are doing in terms of contracts, so they have a wrong impression. So if a bank is doing murabaha in a proper way, there's no Sharia issue there, but they think it is similar to an interest-based loan. So it is a lack of education. But overall, if you take surveys, and this is a survey which we see in UK in 2012, and it's a relatively small sample, 146 people interviewed about Islamic banks, and you see the perception is not good. In this, the question is, Muslims have doubt about banking products. 1, as you see, is strongly agree, and 2 is agree. So almost 75% of the people have an impression that the products are not right. Muslims believe Islamic banking just change of names. Almost the same percentage, 75, 77% think. Now, as I said, part of this is ignorance, and part of it is when they deal with banks, maybe they don't see any difference between conventional and Islamic. So this is an issue in terms of credibility of a bulk of the customers. And I don't know if you know, Islamic Bank of Britain was working for almost 8 years on a loss. And one of the problems they had was they didn't have enough clients. And in some ways, I think this explains why Muslims were not eager, because they did not see any difference between Islamic and conventional. So this is a demand side issue. Okay, now given this background in terms of what are the key stakeholders and requirements, let's look at the Sharia governance framework. Now, Sharia governance would depend on, of course, organizational arrangements, and also what are the regulatory regimes in terms of what is required by Islamic banks. In some countries, the regulators have very good Sharia governance framework, and we look at some of them. And if there is nothing in the regulations about Sharia governance, it will be determined by the market. Basically, in countries where there's no regulatory requirements, there'll be Sharia governance at the bank level, but this will be done mainly for market reasons, that you want to say your products are Sharia compliant, and you want a seal of approval by having a Sharia board who's approving your products. So it will be mainly market-driven kind of structure. The key issue with Sharia governance, if you don't have a framework, then as we have seen in a banking corporation, only the shareholders' interests are being met by the board of directors. There's no way the interest of the investors or depositors are taken care of. So there is a need to, in some ways, have a framework so that the other stakeholders' interests are also protected. So let's look at IFSB standard. They came up with, actually this should be 2009, not 2008. In 2009, they came up with Sharia governance standards. And the key issue, of course, it's I think a pretty long standard, but the key issue is that they focus on the organization level Sharia governance framework. And they have identified 4 key issues in the standard. The first is that the role of issuing Sharia pronouncements, and this should be done by the Sharia board. So there should be a board, and they should be approving whether a product is Sharia compliant or not. So once you have these Sharia pronouncements, approval of the products, the second level of thing is that the bank has to ensure that the practice of the bank, the operations of the bank is in compliance with these Sharia pronouncements. And this should be done by a Sharia compliance unit within the bank. So this is a requirement in terms of the standards. The third level is that this Sharia unit is implementing the Sharia compliance. There should be an internal audit which ensures that the practice or the operations are in compliance with these pronouncements. So the internal audit basically reviews, and that means that there should be an audit unit, Sharia audit unit within the bank doing it. And finally, they also talk about annual Sharia compliance audit, which would be external. Just like financial statements are audited by an external auditor, they also talk about an external Sharia compliance audit where they should be audited by an external auditor, independent auditor, to ensure that the operations of the bank are Sharia compliant. So these are the key elements which IFSB standards, Sharia standards talk about. As you see, they don't deal with the regulatory requirements of Sharia governance. And I think one of the reasons, of course, is, as you know, IFSB is a political, in a political mean, it is the members of IFSB are central banks, and sometimes it becomes sensitive if you want to impose certain regulatory things which are sensitive. So they, in terms of regulations, their standard says there's no single model and no size fits all is prescribed. So if you have a central Sharia regulatory environment, it's up to you. If you don't have it, they'll leave it open. Especially, for example, a central Sharia board, whether there should be a central Sharia board or not, they don't impose anything. It's basically they have left it to the countries to either adopt it or not. But they talk about a governance committee which should look into the Sharia issues, especially in terms of protecting the other stakeholders. Now, of course, in a lot of banks, there are governance committees. But most of the governance committees, they look at issues related to appointment of board members or senior management, compensation, and etc. I don't think there's too much issues related to Sharia governance and protection of stakeholders in Islamic banks. So this is a suggestion in the standards, but I think this has to be implemented. And sometimes if the regulators don't implement these, it's very seldom that Islamic banks will do these things. In a lot of cases, Islamic banks probably are not even aware of the Sharia standards, which are published by IFSB. Now, in terms of the Sharia requirements, if you remember, we talked about 4 different requirements. Not 4, I mean 3, the legal requirements, the social, and the credibility. As we see that the IFSB focuses mainly on the first legal requirements in terms of Sharia-compliant products and also Sharia-compliant requirements. In terms of social credibility issues, they don't touch on those things much in the standards. Okay, now, before we move on, the key issue, what we gather from IFSB is, if you want to look at Sharia compliance functions within a bank, there should be a function which liaises with or is dealing with the Sharia board. So you have a Sharia secretariat which deals with that. And then you have a Sharia review function, which basically ensures that whatever the board approves, it is implemented in the bank properly. And this would also include basically ensuring that the operations are in compliance with the Sharia compliant, the structures. There's a risk management unit which should look at the Sharia risk. As I discussed, if there is Sharia audit and if income of non-Sharia compliant practices are taken out, that's a cost to the bank. So this is a risk issue which the risk management should also look at. Identify, measure, monitor, and report Sharia non-compliance risk. And of course, we also talked about the Sharia audit, which should ensure that this review function is done properly. And if there are any non-compliant income, that goes to a charity. So all of these together would construct a good Sharia-compliant governance framework. Now, just a slide on, in terms of specifically when you talk about product development, we know that product, and I think Shahir had touched on some of these things. You have different phases of product development. And I'm looking at product development in 3 phases. One is the idea generation and acceptance. You start with different ideas, then you pick an idea, and you want to develop that as a product. Before you go and actually start developing that product, you have to get a Sharia approval of the concept paper. Because if you start developing the product and you go to the Sharia board later and they say, no, it is not Sharia compliant, then you have to start all over again. So before you invest the resources, you start with the Sharia approval of the concept paper. And once this concept is more or less approved by the Sharia board, then you go and develop the product, all the structures embedded in the IT systems. And of course, at that level, you have to take a final approval of the product in terms of documents and the processes, how it will work from the Sharia board. And as we have seen, after launching a product, there has to be regular Sharia audit in terms of what was approved by the Sharia board and whether it is being implemented, especially when it comes to operations and process flows. Now, looking at the global Sharia practices, Sharia governance practices, we see that there are different types of Sharia-related units or organs. Of course, in most banks, you will have a Sharia department. Depending on the size of the bank, the department may be large. Or if it's a small Islamic bank, it may be a small department. In some banks, they use advisors, especially investment banks. They don't have a regular Sharia department. They have maybe a person who deals with Sharia issues. And if they have any questions, they would have an advisor. They would go to the advisor and take suggestions or input from them. Of course, we talked about the Sharia Supervisory Board, which basically approves the product from a Sharia point of view. Nowadays, we also have a lot of Sharia advisory firms, professional Sharia advisory firms. And they make basically income by providing services. In the Gulf, there are quite a few of them. Even in IFES, where Shahir is from, his company also provides Sharia advisory in terms of product development. And then, of course, in some countries, we have national Sharia authorities. And countries, of course, like Malaysia, Indonesia, Pakistan, they have national level Sharia supervisory boards. And at the international level, we have some standard setting centers like IFE, Sharia standards. The Sharia board there is an international group of scholars who come together and discuss different products. And of course, the Islamic Financial Fiqh Academy, which is OIC based in Jeddah. They also have rulings on economics and finance. Islamic Fiqh Academy scope is much wider. They rule on different things, health and environmental and those issues. And some of their resolutions are on economics and finance. And Islamic Fiqh Academy, by the way, as you know, that they have ruled on Tawarruk, that organized Tawarruk. In 2009, they come up with a resolution that organized Tawarruk, as practiced by banks, is not actually Sharia compliant. So we have these different levels of bodies, both at the organization level, national level, and international level, which deals with Sharia issues. Now, in a specific country, it will basically, what will exist of these in a specific country will depend on the regulatory requirements and what the legal requirements are in terms of Sharia compliance. Now, let's spend a couple of slides on Sharia Supervisory Board itself. As we know, their role is very important because they ultimately approve whether a product is Islamic or not. And the issue is that if we again go back to the 4 requirements we talked about, with product approval, they do this regularly. This is the key job. In terms of Sharia compliant operations, I put a question mark. Board does not have time to look at operations. What they do is they require Sharia audit, and actually the audit report is presented to the board. So they are not directly involved with the operations, but the audit report gives them an idea, and finally they have to approve the audit report. In terms of fulfilling the maqasid, I think at the bank level, this is not discussed much according to what we understand. And the Sharia scholars, when you talk to them, they say that actually this is not their role. Most of the Sharia scholars are employed in the Sharia board through a contract, and the terms of contract basically defines what they can do. And in most cases, the terms of contract is very limited. The terms of contract says you'll be reviewing products and making judgments whether they're Sharia compliant or not. And of course, maybe if it's auditing, you have to see it's practiced properly. Terms of reference of most Sharia boards does not include looking at broader Sharia issues. So Sharia scholars would say this should be done at the regulatory level, not at the bank level. Okay? And finally, credibility, trust, again a question mark. The terms of reference is very narrow in terms of legal compliance of products, not the other issues which surround the social or the credibility issues. Okay, so let's move on to the last part of the presentation in terms of, so we have talked a lot about credibility. Now, this is a very interesting survey. As you see, it's done by ISRA, which is an organization based in Malaysia, International Sharia Research Academy. And they interviewed, or they had a survey of 36 Sharia scholars. And this is a pretty recent one, 2015, they published it. And these are Sharia scholars. They had the question, doubts about credibility of Sharia board members. Okay? And we see that majority of them, they said it's true that there's some credibility issues of the Sharia boards. And then you have not true, and this. I'm just showing this to make a point that even among the Sharia scholars, they feel that there has to be some improvement in Sharia. And this is a research reported by ISRA. So given this issue, how do we go about improving Sharia governance? I think given that these are the problems, we have seen the reputation risk in terms of what people think, I personally feel that there definitely has to be a national framework for Sharia governance. If it is left to the market, it becomes very uncertain in terms of what is happening in terms of Sharia governance. So a national framework for Sharia governance is important. And whenever we talk about laws and regulations, it boils down to the political will. So in some countries, there's political will, and the governments are taking action to remedy the situation. In other countries, it's left to the market. So in terms of regulatory regimes, we can think whether there are laws and regulations related to Sharia issues, and whether there is an active national Sharia authority or not. And I use the word active because in some countries you have Sharia, national Sharia bodies, but they are not directly engaging with the industry. When you talk about active national Sharia authority, these national Sharia councils or authorities are meant to provide input to the industry. And the other issue relates whether the national framework provides a framework for Sharia governance at the bank level, okay? Terms of reference at the bank level. And what we can think in terms of the framework, in terms of whether, basically what IFSB has proposed, that you should have guidelines in terms of how the Sharia governance should work in the bank level, that each bank should have a Sharia unit, what are the roles of the Sharia members, what are the qualifications of them. And again, Malaysia, I think, has an excellent framework for, regulatory framework for Sharia governance. The other issue, which is the harmonization of Sharia interpretations to ensure compliance with Sharia principles. This may be, again, an issue which the regulators would require, that there should be Sharia audit and make sure that all the banks in that country are following similar kind of Sharia interpretations. Now, if you don't have a regulatory framework, in the same country, you may have some banks provide, serving a product which other banks don't serve because the Sharia boards don't allow it. And actually in UAE that has happened and still happening. Some banks, for example, provide tawarruk products. In some other banks like Dubai Islamic Bank, they don't provide tawarruk products because the Sharia board is not allowing them. Sheikh Hussain Hamid Hassan, who sits in that board, he doesn't allow tawarruk. So the banks where, so you have a disparity in terms of the products, and that also creates confusion among the clients. The other issue is the product clearance. So if you have a national Sharia board, any product which goes into the market, the national Sharia board will review it and approve it before it goes to the market. So you have more standardized products within the jurisdiction. And of course, there are operational issues which I've talked about. There may be some guidance in terms of the operational issues. Now, given this background in terms of a sound Sharia governance framework, I think a good example, this slide I added later, it's not in your thing, but it is a robust Sharia regime where you have active governance regime in terms of the national level, and also, as you see, there's laws and regulations related to Sharia. As Dr. Zamir mentioned, in 2013 in Malaysia, they enacted a law, IFSA, Islamic Financial Services Act, and they've made non-Sharia compliance a crime. So the law says, it's very interesting, the law says that if a person is found to be non-Sharia compliant willfully in an Islamic financial institution or Islamic bank, the person can either has to pay a fine of 12 million ringgit fine or 6 years in jail. So they've made it a criminal offense to be doing something non-Sharia compliant, and it's in the law. Then you have active national Sharia board in Malaysia and also in Pakistan. The central Sharia board sits with the central bank. So they have a central Sharia board which deals with Sharia issues. In Indonesia, there's a central Sharia board, but it is with the religious ministry. So it is more independent in that sense. And like Islamic Fiqh Academy, they deal with different issues. So any And they have in that, under the Ministry of Religious Affairs, they have a special unit which deals with bank-related issues. And then there's regulatory terms of reference of what is the structure of the Sharia board, what are the qualifications, how long they can serve. For example, in Malaysia, Sharia scholar can sit in only 2 Sharia boards, one in a bank and one in a takaful company, not more than that. But if you don't have such regulations, we have cases where Sharia scholars are sitting in 70, 80, 90 Sharia boards. Okay? And the question is whether when a Sharia scholar is sitting in a 70, 80 boards, whether he can perform the duties properly and things like that. The other issue is input on Sharia fiqh issues. Again, this happens because you have a central Sharia board. Whenever you have a new product, it goes to the regulators. The regulators look at it, the risk-related issues, and the Sharia board, central Sharia board, looks at the Sharia-related issues. Product clearance, yes, and then operational issues. Again, we talked about different operational issues. Not everything is covered, at least some things are covered. For example, in both countries, they require Sharia audit to be taken place and reported to the Sharia board. So I think this in some way shows a sound, solid, robust Sharia governance regime. And then these are some of the terms which are required for the Sharia board in Malaysia. So again, as I said, they have a regulatory framework and a document which outlines, and these are the key issues. I don't want to read everything, but as you see, they are pretty detailed in terms of what they expect a Sharia board to do. Okay. Now, finally, I just want to spend some time on the diversity of fatwas. Now, I think there's a conceptual difference in terms of what we understand as fatwa traditionally and what is law. In the past, what happened is somebody has a problem, goes to a religious scholar, and asks for an opinion, and whatever the scholar says, it's up to him to take it or leave it, right? Most probably he'll accept it. Now, when you talk about financial transactions, there are a lot of externalities. You're talking about maybe 2 or 3 people in a Sharia board making a decision, and this decision affects thousands or maybe sometimes, depending on the size, hundreds of thousands of people's money. So it has a huge impact in terms of what banks can do and not do. So I think when we talk about, we say that diversity of fatwa is good and things like that, we are thinking in traditional fatwas, but when we're talking about law, law has to be in some way standardized so that there's no diversity in terms of, because it creates legal risks. So I think conceptually, when we are trying to implement Sharia in Islamic banks, we have to think in terms of laws, not the traditional fatwa. And again, because a decision of 2 or 3 people makes a huge difference in terms of what banks can do and not do. For example, yesterday we talked about these Sharia indices. Now, depending on how lenient you are or how strict you are in terms of your thing, your investment universe is very different. And that may make a very big difference in terms of what companies you can invest in and not. So this is one issue, that we have problems in terms of different schools of thought, different interpretations. That's acceptable, that has been there traditionally. But the problem is that you have different scholars with different rulings and the same scholars with different rulings sometimes. And I mean, that means what? That one of the problems which arises is the issue about fatwa shopping. So if some Sharia scholar is very strict, maybe next round the contract will not be renewed and you will get some other Sharia scholar who's more easy in giving fatwas easily. Now these are actually discussed in literature, and I have seen this word fatwa shopping even in an IFSB document. So when we're talking about it, sometimes it's sensitive things, but I think these are important things to discuss to bring in more discipline in terms of Sharia governance. And as I have mentioned, diversity of fatwas create uneven playing field. And like in UAE, some banks using tawarruk, others don't. So some banks are in a disadvantageous position. The issues about reputation, credibility, creates difficulty in cross-border transactions. For example, in Malaysia, the understanding of the Gulf scholars is they are more lenient in terms of some products. And when Malaysia has some, for example, international sukuk, maybe the GCC banks will not invest in them. And to remedy this, in Malaysia, they're trying to bring in more Gulf scholars into their Sharia boards, so that they can sell products across. And then it also will eventually affect the global growth of Islamic banking, because some countries, depending on the interpretations, may accept or not accept, and engage in international transactions. Again, this is the same research which I showed you before. And this is, again, an interesting survey, as you see. What are the opinions of Sharia scholars in different regions on tawarruk and guarantee fee? As you know, traditionally, guarantees should be gratis. You cannot charge anything. But some of the contemporary scholars have permitted taking a fee for giving guarantees. So, as you see, permissible of the 20, actually this should be 36, not 26. There's 36. So of the 36 scholars, 3 say tawarruk is permissible, not permissible, no answer. And in terms of guarantee fee, as you see, 10 people say it's permitted, 17 not permissible, and no answer. So the key issue is, as we see from the survey, depending on what region you're looking at, there's a huge diversity of opinions on these two issues. And they have actually listed some other products also. So what this all boils down to is that if you're talking about law but not fatwas, we really need to have, at least at the national level, some uniformity and harmony in terms of what Sharia ruling should be. So at the national level, if it's market-driven, without any regulatory framework, I think you will not have, you'll always have this diversity of fatwas, and it will hamper the growth in the long run. And also we talked about the issues about clients being confused, one bank allowing tawarruk, other is not, so they don't know what really is going on. At the national level, we can have harmonization if there is a central Sharia board, as we have seen. And also, not only that, you can go at another level and have Sharia parameters and standards. And again, Malaysia and Pakistan, Malaysia has come up with Sharia. Actually, they started with parameters, now they call it standards. And I was informed by Shami that the standards, they are very detailed in terms of what is a standard and what is a recommended guideline. So the what they call a standard means if you're using that product, that should be required in that product. And a guidelines means it's optional. You can have it or you don't have it. So they have detailed standards for different products, even for WAD, for HIBA, and so I think 12 products they have come up with standards and developing more. In Pakistan also, they have some parameters, but the good thing in Pakistan is on the central bank board, they actually have sample contracts also. And it's a very interesting that people who are new to Islamic bank, they can look at these contracts to have a basic understanding of what a musharaka contract looks like, for example. And they are pretty good. I mean, they can be used actually in financial transactions. And at the international level, of course, we have mentioned about IOFI. IOFI has done an excellent job coming with Sharia standards. And the good thing about IOFI is that their Sharia standards are about Islamic financial products. So a lot of standards are geared towards Islamic financial products. So I think, and the good thing is it is done by an international Sharia body. So you have representatives from different regions and countries. So in some ways it's more universal. But the only thing is, of course, it's not binding. And you know, IOFI has been there for since a long time. Only 5 countries have basically adopted these. And that also, not in a very strict sense. They say it's recommended that you use IOFI, but ultimately, for example, in Bahrain, there is no regulatory overview or oversight of whether the IOFI standards are being used. Okay? And of course, the issue about a global Sharia body, Islamic Fiqh Academy is a global Sharia body. There were some initiatives actually at the IFSB level to initiate a global Sharia board. But again, I think it was not agreed upon by the members. And they said that different countries have different, the schools of thought. And if you have unified, that will be over restrictive. So again, IOFI is an international body. So at least we have this. The global Sharia body, as I said, Islamic Fiqh Academy is a global Sharia body which meets every year actually to discuss different issues, and some of these issues relate to finance and economics. I think that's it. If you have any questions, we can discuss the questions. No questions? Sharia is a sensitive issue, right?
Yes.
Yeah?
That's why, to keep silence is safe.
I understand Sharia is a sensitive issue, but we're talking about governance here, how to implement Sharia in a proper way. Well, if there are no questions, maybe I can ask something myself in terms of how Sharia governance is in Turkey, in terms of what is the framework. I don't know if there's any regulatory requirement or it is industry level thing, and I mean just to educate ourselves.
All right, I am talking on behalf of my colleague here, Hoja, because Dr. Ishak is a member of Sharia board in an Islamic bank in Turkey. Since we are always in communication with and interacting with Sharia boards, we know what they are doing and how they are conducting their businesses. That's why I have some saying on it. In Turkey, each and every Islamic bank has their own Sharia board separately. So there are no links. Even there are some international Islamic banks here, such as Al Baraka and Kuwait Turk, They have Sharia boards in the mother company in Kuwait and here. They are separate as well. And on corporate level, under the umbrella of TKBB, there is another Sharia board. It's somehow an advisory board. The government is also studying on this issue, whether the Sharia board is centralized or diversified, not yet decided, because there are some issues. If it is standardized and centralized, there are pros and cons. Pros, the competition, because in some Islamic banks, some products are not approved, whereas in the others it is approved. So the competition is not very fair. This is the concept. If it is not centralized, it will end up diversification of new products and services. This is, I think, pros of it.
Yeah, that's the argument, innovation.
Yeah, innovation, exactly. So this is the case in Turkey now. There is not yet a centralized Sharia board. They are separate, diversified, but there is an initiative to make a centralized body. But the question is whether this body will be at the top of everything and they have the authority to cancel the Sharia board approvals of the others or not, you know. It's a controversial issue, right?
Okay, I mean, if there's no other comments. If you want, I mean, time-wise, I think a few minutes, otherwise, you want to clarify some things, and Shahir is here now, maybe. He's, by the way, a Sharia auditor too. IFAS, they do Sharia auditing. I'll just share something he just told me today. Very interesting story. With your permission. He was auditing, he told me he's auditing a fund. You know, remember we talked about the fund. So a point he pointed out was he does a monthly review, and maybe you can share it yourself, but he does a monthly review, and at the end of the month, you have a balance of what companies you have, right? But if from the beginning of the month, just before the review, if you have a company which is not Sharia compliant, you sell it, it's not captured in the non-Sharia compliant income. So he was insisting to get information on all the transactions during the month. Okay? Then maybe you can continue, because that's where the sensitive issue comes in. Then it's very interesting, actually. It's from his experience.
Thank you. Just to elaborate on the issue, we do Sharia audit as part of our work as a consultancy business, and one of the funds we auditing is equity funds. So they buy and sell, you know, public equities. So the trends, how they do it internally, is to check at the end of each month the holding of each of the funds they have, and see whether these funds actually match the requirement of Sharia. So is these funds, are the holdings, the public basically companies are part of the approved companies or not? Now sometimes you have a company or you purchase a stock or a share that is Sharia compliant, but then after 2 or 3 months the company ratios changes and then it becomes not Sharia compliant. Then the fund manager will have, let's say, 1 month or 2 months to dispose of that share. Now, what we found out, that's actually the fund managers usually try to purchase on day 2 of the month, non-compliant stock, and sell them on the 28th of the month. So actually, they can't be captured within the existing procedures of the internal audit process. So we said to them, okay, let's enhance the existing process and let's have basically, let us see what's the scope of these issues. And we found actually there is a lot of transactions happening like this way, and the funds manager was happy because nobody's deducting basically that they are doing that and maximizing the profit. So, because these funds usually that's outsourced, yeah? So the fund manager, they will be purchasing for different funds. Right? And they will say, okay, this is an interesting stock, let me buy it also for these Islamic funds. And they do it without basically understanding the consequences of what's happening in an Islamic fund. So we said to the scholars, okay, now these funds that we actually, the transactions that we discovered, we need to understand how much actually money we made from that. Now, you purchase on a certain price and you sell on a certain price, you might actually make money, you might lose money. But if you made money, that profit income is actually going into the fund. So we need to identify that amount and basically dispose it to charity because it's illegal, it's not Sharia compliant. And the scholars was adamant that we shouldn't go into that details. This is, you know, you should go with the process agreed, which is at the end of the month, and if it's there, then we should be fine. So I insisted, basically, and I almost went into a fight with the scholars that this is actually not good. The CEO of the company then jumps in and say, look, if the scholar says no, why you're bothered? So you are not a Sharia scholar, and they say it's fine. So you are an auditor. So you just follow what the Sharia scholars say. And if they are happy with it, why you bother yourself with this? So, well, okay. I mean, it's not right what they did, and I think it's part of lack of understanding what is important and what actually makes something Sharia compliant or not on that level in terms of procedure. You know, if you find that's actually, yes, I have the procedure, and actually they can report to you that everything is okay. But actually, are they auditing the right thing? Are they processing completely? Are they checking everything? And this is part of the governance. Part of the governance is actually to have a proper process. So you have your internal audit. But whether your internal audit is actually doing the right thing or not, that cannot be discovered until you have an external auditor to check out the exact process and procedure for the internal audit. And this is specifically applied within the Sharia. Now, the Sharia side, most of the banks, they don't have external Sharia audit. They will always rely on their internal Sharia audit. Now, internal Sharia audit, and I myself was an internal auditor for an Islamic bank. And you will have a lot of pressure. You will have a lot of pressure. I mean, you know, I was an external auditor, and the CEO was very furious that actually I am interfering with that. So imagine if you are an employee of the bank. So how much pressure you will get. You know, I think one of my jobs, which I actually, at that time, I was having a fight with the collection department in an Islamic bank. You know, I'm working for the bank, and I was telling them that if somebody defaulted or did not pay, then we put a strategy, basically, a process, that you call them the next day and give them a week, basically, to pay. And if they don't pay, then you send a letter. And for that letter, you charge the exact amount of cost of that letter. And then, if nothing happens, then you refer it, basically, to an external collection team to start the process. But in a conventional way, they don't do that. They start charging immediately from day one. So I had this fight with the collection department all the time. That's actually should follow the process from a Sharia point of view, because this is how Allah has asked us to do. You give time. Maybe somebody has forgot. Maybe maybe he was traveling. So give him the benefit of doubt for at least 1 or 2 weeks before you actually start charging him anything extra or putting him. So I have this problem, and then I send an email. You know, when I found out that actually they wasn't fellow, and that's part of my internal audit. So I sent an email to the CEO and said, if actually the department is not stopping, the collection department wasn't stopping to actually do and follow the procedure, then you're putting the bank actually at risk, because that's what the Sharia board has said. And if you don't do that, then I will report it to the Sharia board, and they actually might, you know, fine the bank. I will ask the bank, you know, to put the bank under some restriction. And he was furious. He's coming back and saying, how can you send an email like this and you threaten us as a bank to report us to the Sharia board? I said, this is my job. I have to report to the Sharia board what I found out from internal audit, because they are my reporting line. He said, no, if you want to do anything, you first discuss it with me, and then if we don't agree, then you can report to the Sharia board. I said, no, I have the right to report directly to the Sharia board. That's how you should be independent as an internal audit. And he was refusing all the time, and then he threatened me actually to suspend me and put me under investigation to put the bank at risk. And this is a real story. This happens with me. It was nobody else. And I had a complete week with fighting with the CEO of the bank, trying to tell him that's actually what you're doing is wrong. You can't threaten me and you can't suspend me because of doing my job. So people still don't understand now what is exactly the segregation of duty. How can you actually ensure that there is a proper internal Sharia audit that's actually being conducted? And the only way you can do that is by adding another layer to this, which is an external Sharia audit that can verify that the internal audit is done properly. The whole governance framework from a Sharia point of view operate in a proper way within each of the banks. I hope that helped.
Thank you. Very interesting insight of practical problems in terms of Sharia audit. If there's no questions, I guess we'll take our break. Thank you very much.